Hey all, welcome to ShareTreck. This is Raj here. Friends, today we're going to do an annual review of Beam Therapeutics. Earlier, last week, we did CRISPR Therapeutics 2024 review. If you haven't checked it out, just please go back and have a look at the homepage of our YouTube channel and you'll find it in the last 2 to 3 days. That said, let's get started. Welcome back, friends. I've been battling lower back sprain for the last week or so. I pulled it in the gym and I've been on paracetamol for almost a week and it's not going away. So I'm planning to go to a chiropractor today or tomorrow, depending on when I get the appointment. Today I'm going to talk about Beam Therapeutics, which has demonstrated notable progress in its pipeline, with Beam 101 and the ESCAPE platform as key examples of the company's strides in advancing gene editing technologies. However, while these achievements mark important milestones, I think that there's a long runway in front of the company before it can deliver substantial value to its shareholders. Now let's talk Beam 101 first. It's a promising yet secondary driver for the company in my opinion. At the recent 66th annual meeting of the American Society of Hematology, Beam presented the first clinical data for the Beacon trial, its ex vivo base editing program targeting sickle cell disease. The data from the first 7 patients highlighted Beam 101's ability to shift the hemoglobin profile and achieve rapid engraftment. Despite these encouraging results, a patient death attributed to the conditioning regimen rather than the therapy itself underscores the challenges inherent in such treatments. The positive outcome is that the cloud over Beam 101 has been lifted. It is busulfan, so that's the positive, but the fact remains that patients potentially face the challenge. CEO John Evans acknowledged the program's clear regulatory path validated by the recent FDA approvals of Vertex Casgevy and Bluebird's Lyfgenia. However, Beam 101's significant lag of over 4 years behind Casgevy in commercialization limits its near-term impact on valuation. Even though it could turn out to be a superior product, the market is already being consumed by the existing gene therapies for SCD and TDT. Investor skepticism still persists on Beam, which can be seen by the price chart, which we'll talk about towards the end. This is particularly because the treatment takes 6 to 12 months and the revenue recognition is also delayed. So these are the challenges associated with ex vivo gene editing in sickle cell disease already seen with Lyfgenia and Casgevy, and Beam 101 is also likely to be the same. While technically promising, it is positioned as a major advancement and could be ahead of the pack, best in class when it gets approved, but it's still not a major valuation driver for the company. Let's look at ESCAPE, E-S-C-A-P-E. Now that's where I'm a little bit enthusiastic, unlocking long-term potential for Beam because it can be used for most transplant situations. ESCAPE platform represents a transformative opportunity in hematopoietic stem cell transplantation, offering a potential alternative to traditional chemotherapy conditioning for myeloablation. Preclinical trial data revealed ESCAPE's capacity to enable robust and durable engraftment of base-edited cells while inducing high levels of fetal hemoglobin in non-human primates. Evans emphasized the synergy between Beam 101 and ESCAPE, noting that infrastructure and knowledge developed for Beam 101 directly benefit ESCAPE, maximizing efficiency and resource utilization. Should ESCAPE succeed, it could dramatically expand the applicability of base editing by eliminating the need for chemotherapy, unlocking broader opportunities in hematology and beyond for Beam. Strategic investments and operational readiness is another area I'm looking at. Beam's foresight in establishing a North Carolina manufacturing facility to support both clinical and commercial supply is a crucial enabler for its program, and the facility equipped to scale up with growing demand reflects the company's long-term commitment to operational readiness and program scalability. So those are all some of the positives. However, I come back to the point that the long road ahead or the long runway is visible for Beam, And it's going to take some time, despite all these advancements, for Beam to deliver shareholder value. Beam faces the broader industry challenge of lengthy development timelines for gene editing therapies, high costs, and the challenges having to tie up with payees to pay for those kind of costs for therapies. The next significant catalyst, I think, is the readout for Beam 302 in AATD, that is alpha-1 antitrypsin deficiency. And that reading is going to come in 2025 and represents a potential turning point. Analysts see this program as a major opportunity contingent on a clean safety profile with the possibility of doubling the company's stock value. But again, all of this depends on FDA looking at the data and concluding that it is something worthwhile proceeding. Beam's financial health is bolstered by its strong current ratio, and it positions the company to sustain its clinical program. However, meaningful shareholder value hinges on its ability to achieve clinical validation and navigate complex commercial pathways across its portfolios. And it's the same problem for most of the other genomic companies which do not have a monetized therapy in their portfolio. In conclusion, I'll say that Beam Therapeutics has made commendable progress, albeit very slowly, particularly with Beam 101 and Escape. While strategically investing in infrastructure to support its ambitions, I think the long timelines and the market competition and inherent challenges of gene editing make the runway ahead for the company very slow, and the company's journey to delivering shareholder value remains in its early stages, in my opinion. And the next few years will continue to be critical in determining whether Beam can transition from promise to meaningful impact, and from a startup company to something that actually has monetized products and has the potential of probably delivering shareholder value and potential dividends going forward. Now, before I end this video, I want to show you what the price chart looks like and how what I said is also seen in the price chart. Let's go to the TradingView platform. Here we are looking at a chart for Beam Therapeutics. Each of this candle is a one-day candle. I have 1 year time frame shown out here, and as you can see, we haven't been going anywhere in particular. There's a $9 to $10 price range within which Beam Therapeutics has been moving around, and I'm just going to block out all my indicators out here. I don't want any of them. Just let us look at the plain headwinds in front of the stock price. 1, 2, 3, 4, 5 resistance lines are above and a little support is there below. And we look at the MACD. It's bullish right now, but it's tending towards the signal line. Volumes are also average, and momentum is just above average, but it's not going here nor there. And I'm recording this on the 16th of December at around 8:48 a.m. In the pre-market action, it's up 1.40%, and we have got the next resistance at 29.41. But overall, I don't think we are going anywhere soon, because there is no major news coming up from Beam Therapeutics, at least not until the middle of 2025. So given the fact that the entire market is on fire and everything is highly stretched in valuation, I think people are finding more excitement elsewhere. And the investor enthusiasm in Beam Therapeutics, I think it can at best be described as average to below average. And there are other areas of the stock market which are witnessing a lot of action, lot of interest, and lot of returns. So I think, given the fact that we are in this kind of environment right now and interest rates are still pretty high, I think Beam needs a long runway to go ahead and show some promise of a return. And the animal spirits needs to come back into the genomic sector. I don't know when it's going to happen, but at least it's not there in the next 3 to 6 months time frame, in my opinion. I couldn't find any major catalyst in the price chart as well. So overall, it's a meh kind of report. I mean, it's not much to do for the investor right now, at least for the next 6 months. Then the question becomes, while the market is at fire and Beam and many genomic companies are available very cheaply, is this a time to load up on genomic companies? For that, I would say that I'm not quite sure that this is the right time to load up on genomics. Of course, hindsight will be 2020. a year down the line, we may look back to this point of time and say, yeah, we should have loaded up at that time when the share prices were low. But there is a huge element of risk out here. And the risk basically is what is going to happen when the new administration comes in, when they start deregulating and when they start putting up tariffs, and how is the US dollar going to perform, how the treasuries are going to perform, is the economy going to get into a recession after overheating? All of these questions remain. So at this point of time, I am going to be careful with genomic investment. And friends, I'd like to tell you one more thing, which is a very, very important factor one has to keep in mind. For anything to succeed in the market, you need to have good marketing. And these days, marketing is basically online marketing. I'll give you my own personal example. For our channel in genomics, I want to attract more people who are interested in genomic shares. So whenever I try to advertise our channel on YouTube, I get a big problem because YouTube does not allow to advertise anything to do with gene therapy or cell therapy. They do not allow advertising at all for this sector. So imagine trying to promote products like Beam 101 or Casgevy. It's all going to be on expensive platforms which has got a lesser number of people watching. In other words, cost per eyeball attracted is going to be high for gene therapy as compared to other companies and other kind of products. So that's another big headwind for gene therapy companies. So given all of these things, I would say that it's safer to wait until we see a demonstrable upturn in the charts. And after that, I think we can enter into gene therapy. What it would mean is that the profits that you would make from gene and cell therapy is going to be less as compared to some other sector. You will enter the share at a much later stage. But entering it right now means that you're going to be continuing dollar cost averaging for an unforeseeable future, still hoping to make up big money at a later point of time. And if you look at it from the point of view of actual returns and opportunity cost, if you invested $100,000 over a period of 4 years, dollar cost averaging on genomics, then you really want the genomic stock price to hit the ceiling like Nvidia did, so that you get some meaningful returns. Because while you're waiting for the money, for the share to pick up, you're losing around 5% or something, which is the alternative returns at the very least for the money. So keep the alternative cost also in mind of alternative investment cost, where if you had put it somewhere else, you could have earned some money out there, which you are not earning right now. So that cost also had to be built into it. So overall, I think now is not the time for gene and cell therapy, even though they're doing a lot of great work. I'm looking at it purely from the point of view of investments and returns. And my framework is that if I'm investing in a stock, I need to save my capital first of all, and second, I want to beat inflation, which means I need to get a return of around 3.5% to 4% to preserve the value of my investment. And on top of that, I want at least 2 to 3% returns. And right now, I don't see gene therapy delivering that in the next 6 to 8 months. So that's where I'm coming from. But if you're a young person and you believe firmly in genomics and you're willing to dollar cost average and your time horizon is of 10 years or more, then I think you could find some opportunities here for dollar cost averaging. But even in that, I would say a company like CRISPR is much better right now as compared to Beam Therapeutics. We haven't yet seen the first base edited or prime edited product approved by FDA. And the future of FDA, as well as all these regulations which prop up and give credibility to approved therapies, is also under question. So that said, I would like to end my video here, my friends. I would like to hear from you what you think about Beam Therapeutics. Please put it in the comment section. Are you still dollar cost averaging? How firmly do you believe in gene therapies? So I'd like to hear from you. Thanks and have a great day. Bye for now.